You're now listening to the Tax Smart REI Podcast, the number one tax podcast for real estate investors. Thank you for tuning to this week's episode of the Tax Smart REI Podcast. Today, we're joined with John Bianchi to discuss his secrets to finding winning short-term rental properties. I know everybody out there wants to use the short-term rental loophole to reduce taxes, but sometimes the biggest challenge is just getting started, finding the right property. So we're going to be discussing that. Today, we'll be diving into all of that in just 1 minute. Hey, Tax Smart investors. As you may have heard, the IRS received additional funding from the Inflation Reduction Act, and they've been using it to ramp up enforcement efforts, and we've been receiving more requests from investors looking for audit support than ever before. That's why we created the IRS Audit Checklist, which is designed to help you stay compliant in the event of an IRS audit. You can access the checklist by visiting www.therealestatecpa.com/IRS-checklist. Again, you could grab the IRS Audit Checklist by visiting www.therealestatecpa.com/IRS-checklist. That's it for now. We'll dive right into today's episode. John, thank you so much for joining us today. Could you give our audience just a brief overview of your background and how you got involved with short-term rentals?
Thanks, guys, for having me. I do appreciate it. A little bit of background about myself. I'll just kind of give my resume so I can build a little bit of credibility real quick, and then I'll kind of give a quick short story of how I got to this place. So as of today, within the past 3 years, I've helped identify over 200 plus properties. So I've helped other people buy these properties, and they're all short-term rentals, and every single last one of them is profitable. So we have a 100% track record right now at finding properties that work in the short-term rental world. And the reason being is because I'm obsessed with data, and it's literally all I do. And it's not even all data, it's just Airbnb data. For whatever reason, it gets me super excited. You're able to just see how much every single last person is making, and then you can study it, and then you can replicate it, and then it works. And like, there's a lot of other businesses out there where you can't get that kind of information. And so it just feels like a cheat code when it comes to Airbnb. And I think that's why I'm obsessed with it. But anyways, yeah, so I've been the head of data for TechVestor, which was the largest short-term rental investment fund in America, still is. Have my own business, which is called STR Search. We help identify properties for people to purchase. And, I've been running that for over a year now. And it's going good. This is all I do. I've got 6 free Airbnb data courses that teach you my entire process. One of them is 40 hours long, and I didn't build it until after finding 120 plus properties. So that's kind of the resume, right? Hopefully I can build a little credibility there. But the backstory was that I started off renting out a spare bedroom, learning about this Airbnb thing. I was running a business at the time that I did not care for, and I wanted to try and transition. And I found out that this Airbnb thing was kind of cool. And once you learn the process, it can kind of get easy. And I started reading blogs, realizing that other people were building businesses. I then went out and built my own business out of Chicago and down in Scottsdale and over in Michigan. COVID came around, wiped that out, and I just still loved the industry as a whole. And so I did the one thing I did best, which was data, and I turned my ability to understand Airbnb data into a business. And now we're here, STR Search, So journey has been going for about 8 years.
That's awesome. A lot of people out there looking to find successful properties, and data is always a great approach. And with that track record like yours, I'm sure we're going to have a lot to talk about on today's episode. So kind of just to start off, we work with a lot of investors across the spectrum of real estate. Many of them are high income earners who do like to use short-term rentals to help reduce their taxes, but also because they do tend to cash flow better than maybe your traditional long-term rental. And these were really popular back, a few years ago. What's your take on the overall short-term rental market? And I know it's specific to different places, but in 2025, are short-term rentals still a viable asset class?
Oh, 100%. And now I'm biased, right? So anyone hearing this is like, of course he's going to say that. But I'm actually coming out with some content around this very, very shortly. So I would say Airbnb is still maturing, and it's a newer industry in a sense. Like technically VRBO and renting out homes has been around forever, but the way that Airbnb did it allowed us to tap into so many different pieces of real estate in so many different cities that it's kind of had to learn where it works and where it doesn't work, right? You see regulations coming into place like it's not going to work here, but it does work in other places. And so instead of trying to look at all of the data of Airbnbs in this moment, I just try to think about it in a very simple way and ask myself, does Airbnb make sense in this scenario, right? So if I'm going to New York and I'm staying with one, by myself or up to 4 people, I'm getting a hotel 99.9% of the time because there's going to be somebody at that front door and I know they're going to be there and I can get in very easily and it's going to be a smooth process, right? If I'm going to Gatlinburg with 16 plus people, I'm not getting a hotel room ever There's going to be a 0% chance. And so if we just use this logic of people asking like, hey, what's your outlook on Airbnb? There's all the headlines of Airbnb is dead, and housing prices have increased and interest rates have increased, and like, is it even possible to cash flow anymore? And it's like, well, the first principles of Airbnb is that people need a place to stay in large groups. And if you can find the places where there's good regulations where that's possible, then those are most likely not going to go anywhere, right? The city has said, we're good with Airbnb here as long as you follow our rules and pay your taxes. And everyone goes, okay, sounds good. And so then you find those homes, you rent them out, and there's a lot of travel demand for that area. It's pretty straightforward stuff, right? But the trick is you got to find the home at the right price in the market with the right amount of demand to be able to drive enough revenue to be able to still cash flow. And that is like the thing that I have set last 3 years of focus on and have succeeded 200 plus times. So 100% it's possible to continue to do this. We're doing it right now. I'm seeing them all over the place. I've studied 350 markets, and we have about 15 to about 20 that we know for a fact work flawlessly. So that's my breakdown.
That's awesome. Hey, before we move on to any other questions, as we speak about regulations, that is something I feel like has always been kind of like in the last couple of years, a big topic that we've talked about with other like short-term rentals people, and we've just, heard from clients and things. Is there anything where it's like a simple, I don't know, way that you look at it or research it to say, hey, this is a good market? Or is it just several things kind of all in one to help you understand like, hey, the regulation risk here is low or the regulation risk here is high? How do you kind of evaluate that as you look at properties or markets?
Good question. I am terrible with legalese. Like, it is just kryptonite on my end. So I usually have other people help me understand it so that I make sure I don't make those mistakes. But the markets that I like to go into have to have regulation in place. They have to. If there's no regulation and then they come out with regulation that bans everybody, that was a really stupid move, right? So it has to have regulation. Now, the second piece to this is that you want the city and the area, like the people who live there, to be okay with Airbnbs, and that there's not some big uproar or annoyance or group that's trying to like get them banned, right? And you can find this by checking articles for the city. There's always articles out there that talk about like, are they planning on doing something? Are people complaining? Like, can you look up in Facebook groups? You can kind of see what the community is feeling when it comes to Airbnbs, right? So that's the two things. One, regulation, and you don't want the people to be actively trying to make it more restrictive. And the third thing is like, does that community die if those Airbnbs go away, right? So like the city, how much revenue are they getting from those Airbnbs? How much are they dependent on those Airbnbs? Because some places, they can't get rid of Airbnbs. Like, there's no way they're ever going anywhere. Panama City Beach, they're not going anywhere, right? They need those Airbnbs. That is their economy. And so if you just use that logic and they have regulation in place, you're kind of okay, right? That's my process for figuring it out of where I feel comfortable going and not going.
That's a great answer. When it comes to, we may have just kind of went into this a little bit, but maybe from a data perspective, what should investors be looking at when selecting a market in 2025?
Start with the regulation. So go through the exact same thing that I just mentioned, but then you got to be figuring out the saturation, which I just made a whole video about that as well, so we can get into that. And then the other part, well, before you even get to saturation, if you are looking for cash flow, then what you got to do is you got to be able to figure out, can these properties cash flow, right? Which is not an easy thing to do, but there's a process that I'll try and walk everybody through right now. So if you're following along, like grab out some pen and paper and try and follow this process, or just I'll give the high level understanding, right? So regulation's good, step one. And then we're going to figure out, is there cash flow? If cash flow is what you care about. And then once we figure that out, we'll go into saturation. Okay. So cash flow. I use this thing called the 20% rule. Okay. Now I'm going to state this like several times. It is not 20% cash on cash. Okay. That's not what I'm referring to. It is price to rent ratio. If I'm buying a $500,000 home, I want it to be able to make $100,000. The revenue is 20% of the purchase price. If you underwrite a property where that's the ratio, it cash flows at an amount that you're going to be happy with. Okay. It can be lower, but you're almost always going to be really happy with that ratio. And so as a top line number, when I'm looking into a market, I want to try and see if I can find that. And if I can find that, then I'll spend a lot of time understanding that market as a whole, like spend a couple weeks deep diving it and truly breaking it down, right? So a very quick first check on a market is I use AirDNA to try to understand what a subset of homes can make. So as an example, I'll look into downtown Scottsdale. And I won't look at all of the properties because you got 1 bedrooms all the way up to 8 bedrooms there. I'll just simply look at the 4 bedrooms that have pools that are all relatively close to the downtown area. And I will ignore the luxury and I'll ignore the bad listings. And I'll just take a look at the ones in the middle, the ones that are put together well, that have good photos, that are normal sized homes. Okay. I'm trying to get like a grouping of homes that are relatively similar in the same area. And I'm trying to figure out how much they generally make. Okay. And so once I have that understanding of what they can generally make and what they generally look like, I can then hop over to Zillow and find a property for sale on Zillow that generally looks the same. That's also a 4-bedroom with a pool in the downtown core. So now I have this idea of like how much these homes are making and what they are selling for on Zillow. And then at that point, it doesn't meet the 20% rule. The revenue that I'm seeing over here is at 20% of the purchase price that I'm seeing over here. And if you can see that, that gives you a little check mark to go, this market may cash flow well. And therefore, it's worth spending some time understanding everything about it. That make sense?
Yeah, no, it makes sense. Makes a lot of sense.
That might be the best way I've ever explained that. I've tried to explain that probably 100 times.
That was really well explained. Basically, from what I heard, you're looking at certain areas like near the downtown core, right? Looking to find a subset of properties that kind of meet that 20% rule. And if so, then it's a good market. Long story short.
It's a market that has a chance. Let me I keep saying that because you never know until you truly deep dive it and figure out anything can kind of look good really quickly, but once you really get into it, you figure out all the nuances, right?
Right.
And then the next thing, which honestly, too many people worry about this and you really do not need to. It's the saturation. So saturation is simply, are there too many Airbnbs in that market for the amount of revenue that's being made? And are too many people opening up new Airbnbs and the revenue is not increasing? And so everybody's making a little bit less year over year. Is that the case? Well, I just analyzed, just posted this video this week, but I posted a video on Miami where I tried to figure out, Tom, you're in Miami, they've got 22,000 active listings there, right? So you think 22,000, that's a ridiculous amount of listings. Is it an oversaturated market or saturated market? You don't need to say over. And so what I did was I pulled out every single property on a month-by-month basis and figured out how much they increased year over year. So there's charts in there where you can just easily export it. And now you can see there were, in June of 2022, there were 15,000. In June of 2023, there were 17,000. Therefore, there was 2,000 more listings year over year. And what is that as a percentage, right? And then you can understand how much the supply has increased. Then you can do the exact same thing with the revenue. You pull it out, you check what it was year over year, and then you see if they're going together. So if the supply increased by 10%, did the revenue also increase by 10%? And if it did, then the market is most likely not saturated, right? And if you were to actually look at Miami over the past 2 years, it's almost stayed like in perfect lockstep, meaning that it's almost a perfect balanced market at this moment with the amount of listings that are there. And so not saying that like you can't add more listings, but it seems like as people are adding more listings, the revenue is kind of keeping up, meaning that because there's millions of people traveling to Miami, those Airbnbs are getting filled, right? Even though there's 22,000 plus all of the hotels. So that's how you figure out saturation. And the last thing I'll add on to this when it comes to saturation, which is something that I've started to talk about for the first time, is subcategories. So you can't just look at all of Miami as a whole and say, is it saturated or not, right? Because there's 1 bedrooms and there's 6 bedrooms. There's luxury places, there's non-luxury places. There's spots close to downtown and spots like half an hour away. There's bachelorette themed homes and bachelor themed homes, right? And each one of those ones I just mentioned is going to attract a different traveler, right? A different group of travelers, a subcategory of people going. And so what you need to understand is let's say the 6 bedroom with a pool that is about a half an hour away from Miami, but is going to be sort of like a luxury property. Is that option oversaturated or not? You don't care about the 1 bedrooms that are right on South Beach, right? You care about these ones over here specifically. Are these oversaturated? And you can add enough filters into AirDNA now, where if you can remove everything else and you're just looking at that subcategory, and then you do the exact same process where you pull out the supply and you pull out the revenue and you figure out if it increased or decreased year over year to get the true saturation for that subcategory. And that's what's going to allow you to ensure that you don't put like hundreds of thousands of dollars into a multi-million-dollar property when it's already a saturated market within a Miami market, right? Does that make sense?
Yep.
Yeah, cool. That was a lot to cover. Again, I said pull out a pen and paper. Hopefully someone did and wrote it down.
With 2024 officially in the rearview mirror, now's the perfect time to start planning for how you're going to maximize your tax savings in 2025. With major tax changes looming under the new administration and IRS audits on the rise, navigating the tax code alone is now riskier than ever. Whether you're leveraging the short-term rental loophole, claiming the real estate professional status, utilizing passive losses, 1031 exchanges, or anything in between, our expert team of tax advisors at Hall CPA has your back. We'll help you uncover hidden opportunities and avoid costly mistakes that could put you at risk during an audit. With potentially tens of thousands of dollars of tax savings on the line, why wait? Visit www.therealestatecpa.com/podcast to request your free 30-minute discovery call today. Again, that's www.therealestatecpa.com/podcast for a free consultation. Let's help you ensure you keep more of what you earn in 2025. That's all for now, and we'll dive right back into today's episode. I'm going to be re-listening to this because, believe it or not, this is total side quest from this conversation. Well, it's not. It's on point. I'm actually going to be underwriting a condo here in downtown Miami to see if I bought it, could I just have it as an Airbnb and just park it there? And if I ever need to move into the property, I'll just move into it, right? But that's what I'm looking to test right now. So this is all very helpful. This all makes a lot of sense to me.
Well, do you want to talk about that one for just a second? Can I give a little bit of advice? I can't help it. I got to do it.
Yeah. So. Yeah. I don't want to say the exact location.
No. You don't need to.
Of the exact condo building, but it's in Brickell. And yeah, I'm happy to hear your advice. I'm happy to give more information on it if you need. So
first thought, and I'm sure you've already looked into this, but you always got to start with regulation. Now there's city regulation, but there's also building regulation and HOAs, right? So does the building allow?
Yeah, so this specific building, and there's a handful of others, do allow Airbnbs.
Okay. So obviously next step, I know you probably know this, but I'm just sharing it just as maybe somebody will find this helpful, right? You're going to obviously want to find as many comparable properties as possible on AirDNA. Now, majority of the information on AirDNA is not useful, okay? There's a lot of data that's on there that is not data that you can take and make a decision based off of. You've got to find what I call the good data, okay? Anyone who tells you that AirDNA is not useful does not know how to use AirDNA. I'm living proof that AirDNA works very well. So what I mean by that is they have this one metric called days available. Make sure that you're looking at properties that are 271 days or more. Okay, that means that they've been live for almost a full year. You need that first metric because AirDNA tracks things on a daily basis. And so they can only track moving forward, which means if they've only tracked it for 30 days, it's not going to be useful data. You need the annual revenue number, right? And then the next thing is you also need a full-time host. And the way that you can figure out if a host is full-time is by the amount of reviews that they've received over the past 12 months. So a quick check at this is, do they at least have 20 reviews? And if they do, you go, okay, anyone who has less than 20 reviews, I'm not even going to take a look at their listing. Once you are looking at these listings that do have 20 reviews, you need to open up their review calendar and see how many reviews they've received every single month for the past 12 months. And as long as there's at least 1 to 3 every single month, you know you're looking at good data. So I'll repeat that one more time. You got to have days available above 271, and you've got to have at least 20 reviews, and ideally 1 review every single month for the past 12 months, 1 to 3. And if you can get that, you're looking at good, useful data. Okay. And the reason I stress this is because a lot of people do Airbnb part-time, and AirDNA's algorithm is not perfect. It's the best we have, but it's not perfect. And so then therefore we just want to get out the good stuff. Okay. Now that you've gotten that, you've gotten rid of a lot of the noise. Then you can start looking at the data and trying to figure out where you're going to fall within the ranking of all of the Airbnbs that already exist within that general area. Things to keep in mind when it comes to a condo is going to be views. That's going to be a huge one. If they have water views, do they have parking lot views? Do they have a building view? What's going on there? Because that does make a difference. Additionally, design is going to go really far. So because you don't have a lot of outdoor space and things like that, if you don't have a strong design, you're just going to fall into the pile of all the Airbnbs that don't have good design because you don't have a backyard to add a pickleball court to stand out that makes you a no-brainer to book, right? However, your HOAs that you have within your building also matter, right? Do you offer a pool? Do you offer a gym? Do you offer those sort of things? You kind of want to let people know that those exist, right? And so I could keep going, but those are the basics that you want to do. And then don't lie to yourself when you're looking at the data, okay? I promise you, everybody lies to themselves. Don't lie to yourself. Look at it and find what I call a base comp. Try and find the Airbnbs that currently exist that you know for a fact, like in your gut, you're looking at it and you're going, I know for a fact I can beat that property. I've got better views. I can do better design. I can do better photos. I got a better location. I got better amenities. You go, I know I can beat that. Start there, because if you start there, then you can move your way up. The mistake that everyone makes is they look at the beautiful, perfect Airbnb listing that is like a 10 out of 10 that's making a whole bunch of money, the amount of money they want to make. And they go, what if I did that? What if I could just do that? And it's like, hey, dummy, you don't have the views of the water. You know what I mean? So it's like, not calling you a dummy, but you know what I mean? And so, yeah, follow that process and you'll have a more realistic understanding, and then give yourself a range, because you're never going to get perfect. So are you going to fall between like 40,000 and 60,000, right? Don't just say 50. It's like, what's your worst case scenario? And then the cheat code is, if you're happy with the worst case scenario, which is like, let's say your worst case scenario is you broke even. If you're okay with that, that should be the revenue number where you're like, if I do a bad job managing this, I'll break even, right? It shouldn't be, if there's a chance where you're not okay with the worst case scenario, don't move forward with the property. That's the way that we've had all 200 properties have been profitable, is because we hyper focused on the worst case scenario. And we always tried to make it where in the worst case scenario, it wasn't that bad. You know what I mean? You're still profiting. You're not making as much as you wanted, but you're not losing money, right? And so that's why every single one is profitable, because our worst case scenario is a scenario that still works. Any questions on that?
I'm sure if I sat here, I would drill down into a bunch of questions.
I have a question for you. Speaking, John, about like amenities, you mentioned that a couple times. And I believe, just from what I've seen, like amenities are super important. So can you just talk about like amenities you're commonly looking for? Maybe it's just based on the market and what other, amenities are already there. But talk to us a little bit about how you think about like, hey, a good short-term rental has these amenities, or talk to us about that.
Yeah. So I've been explaining amenities a little bit differently to people to help it make more sense, right? If I had a property, right? If my property was just bedrooms, bathrooms, a living room, a dining room, and that's it, right? And then in the backyard, I did nothing and I had a second living room and I just put another couch in there, okay? That's my Airbnb. Now your Airbnb, in the second living room, you added an all-out game room. And in the backyard, you added a pickleball court, and you also added a hot tub, and you also added cornhole. Just simple. Fire plate as well. You got that there too, right? So now we have to think about this logically. If, say, Tom is a guest. Tom is the guest, and he is now looking at your Airbnb or my Airbnb, and he has $100 to spend. When he buys yours, he's getting a hot tub, a fire pit, cornhole, pickleball court, and a game room. When he buys mine, he's not getting any of that. And so his $100 goes significantly further. So he's buying more for the few days that he's going to be there. Everyone calls it renting, but you're buying it. You're buying it for a handful of days, right? So he's just bought more with his money. So why would he ever, in his right mind, book my place over your place? Okay. Airbnb is a business, and it honestly is one of the easiest businesses because you can look directly at your competition, make a list of everything they have, and then add things they don't have. And now all of a sudden, your property, if it would be head to head, you are selling more things, right? And so that's why amenities work. It's just you're selling more things. Now, every single market is different and every subcategory is different, right? So like we were talking about in Miami, do you have a 6-bed luxury home or do you have a 1-bedroom? Or do you have a little 3-bedroom that is like right downtown core? And what is the group that is going to be staying there? So this is the piece that you've always got to ask yourself first. What is the demographic that is willing to pay the most to stay here, right? And the best way to explain this is you would not put a jungle gym in a bachelorette themed home. It just logically makes no sense. And so if we just start with who's our demographic, okay, that's our demographic. Now let's figure out what they care about, what they enjoy, what would make their time at my Airbnb a fun, enjoyable, memorable experience. And let's tailor all the amenities to that, while keeping in mind exactly what all of your competition has, okay? Now, there's a process here because you got money to deploy and you've got to deploy it properly. And so you're trying to figure out, of this, let's say $40,000 that I have, what should it go to? What should it not go to? And it's like, okay, well, I've got this family demographic that I want to focus on, right? But I have all this competition as well. And I want to beat my competition, but I want to go above them too. And it's like, I want to do even more than they're doing. And so how do I determine what to do? And so the process that you want to walk yourself through is must-have amenities and then nice-to-have amenities. Must-have, what does all of your competition have? Match them. If your budget allows you to, match them, right? Because now people aren't deciding between one or the other. They're saying like, oh, they both have the exact same things, right? And now you're on a level playing field, okay? Then this is where you go deeper and you go, okay, but my demographic is families, and I'm going to make an amazing experience for the kids, because if the kids are happy, the wife is happy. If the wife is happy, the husband's happy. And so then therefore focus on the kids. And so then you take that extra dollars that you've already allocated to the must-have amenities, and you figure out, how do I enhance the experience for the kids so that these families have an amazing time and I get a huge competitive edge over my competition. And now when Tom goes to look at your Airbnb versus my Airbnb, he goes, why would I not buy this one? That is clearly a better experience for my family, and my dollars go further. So yeah, that's amenities in a nutshell.
Yeah, that's a great explanation. That's a fantastic explanation. What I'm going to do, I'm going to review the transcript of this when we're done recording and take a look at this. But this is absolutely fascinating. Amenities is definitely something that's key. Question I had, like, as we're kind of running through this, condo size. I know you mentioned before, like, these are typically Airbnbs are for people who are going to be group stays, right? Like larger groups. Have you seen any success with the smaller units, like a 2-bedroom, for example?
I've personally have not done it myself, but I have seen other people in the industry have a ton of success. So I'm not here to say that those are not going to work. That's not at all what I'm trying to say. All I'm trying to say is that if I'm going to New York, I'm going to stay in a hotel. I've been doing Airbnb long enough and staying in Airbnbs long enough to know that I hate staying in an Airbnb in a major city where I got to go into an apartment where I don't know if I'm legally allowed in there or not. And I got to sneak up to this room, and then all of a sudden I can stay there. And I just think about it long term. That's the type of stuff that the hotel lobbyists are really trying to get away from, right? And the condo buildings don't want, and all these things. And so, like, I'm just thinking personally, now mind you, what you're going into, the condo allows it, right? In Miami, there's a lot of small travel, right? Small group travel is what I'm trying to say.
Yeah.
And, staying in a condo in Miami is a lot different than staying in a condo in like Boise, Idaho. And so just trying to understand your market matters. And then on top of that, I think there's, out of the 22,000 listings that are in Miami, I'm pretty sure 11,000 of them are 1-bedrooms. So you got increased competition, and that's not even including the hotel rooms, which there are a ton of as well, right? So those are my thoughts, just like off the top of my head. How much is the condo going to cost you?
I would say it's probably going to be like around $700,000 for like a 2-bedroom. So my plan for this condo is this, right? This is my thesis, because right now I'm renting out this building, but things in Miami are moving quickly, right? And I don't know how quickly or not quickly the prices are going to rise. So like, what I'm trying to do is lock in a condo that I own, but I'm not living in. And my worst case scenario is break even, right? I'd be happy if I broke even on the thing. I'm not trying to make money on it. It's just like somewhere to park. Just like I'm reserving like a future primary residence is kind of what I'm looking at doing.
Okay. I that makes sense.
Yeah.
That
I feel
makes
like
sense.
then it's like a different mentality then from like what we're talking about with John, which is like, hey, we're looking for cash flow. That's the goal. And like, if you're just like, looking for a primary, kind of just like breaking even, then I feel like, because for those of you who aren't watching on like YouTube and you're just listening to the podcast, as soon as Tom said 700K, John was like, I'm not sure about that, if that's going to work, because the 20% rule means 140K in revenue, right? That you need to hit on that. And I think John and us are like, is that really realistic with the 2-bed?
I have something blocked on my calendar to scratch the surface on this. Like, I haven't even looked into like, is it viable? I just know that this is a good Airbnb because I stayed there twice. And it's one of these buildings in Miami that's always Airbnb'd out. So someone's making money on it. So anyway, I don't want to drill down too much in my situation. It's about me. It's about everybody else.
I think this is perfect. I mean, like, this is, we're taking like a real life scenario and we're trying to make sense of what you should do based off of your scenario. And I want to give advice on it because other people are going to benefit from hearing that, right? The logic that you have where you're saying Miami just continues to rise, there's no more land to build, and home prices are likely going to keep going up. And you're like, I want to continue to live in Miami, but if I don't buy now, I'm going to be screwed, right? Essentially is what you're saying.
That's my mindset, yeah.
Which totally makes sense. Like, it's actually a pretty strategic logic, because if it can cover itself, then you're kind of holding on to it for the time period. And then like, as life goes on, you're like, yeah, now I'm moving in there and it's mine. I'm taking it over and all that kind of stuff. Kind of a cool scenario to be a part of. But the thing you got to reinforce, I guess, is if you're going to do that, you really have to feel comfortable that it can at a minimum break even. And I've said this a lot of times. I apologize if it hurts your feelings, but a lot of higher net worth people that hear about the STR tax loophole, their goal is to break even. And I always say, that's stupid, right? And I go, you don't have to do that. Now, mind you, I apologize for everyone who just called stupid, but I'm saying that you don't have to break even, okay? Like there's ways of understanding the data and navigating that market or any market to be able to find a property that is going to do better than break even, where your worst case scenario is not even close to break even, right? And then all of a sudden, you're not just, here's the problem. The problem is that if your goal is break even, I can almost guarantee you're going to lose money. And you know why? Because today the market's pretty A-okay, right? It's not the craziest thing in the world. The economy is doing okay. The problem is when we hit the recession, and you need to have that foresight. So I stress this every single client we work with. The goal is to get them through whatever recession comes next. That's how I think about this, because today's easy, right? If you're breaking it, you can break even easily today. But what happens when the stock market drops by 40% because of some thing in the world that nobody can control, and the economy comes to a halt, and the number one thing that people are going to stop spending their money on is travel? And then all of a sudden, the competition is through the roof, and not as many people are booking out the 11,000, Airbnbs that already currently exist as one bedrooms. I know you're going for a two, but you get what I'm saying, right?
Yeah.
And so the fear that I always have is, can you make it through a recession, right? With the property. That's what matters. That's why I say trying to break even isn't the smartest, because how long can you go covering the mortgage and the expenses of that property before you got to go, I can't do it anymore. I got to put it on the market. I know I'm going to take a haircut. I bought it for $700. I'm going to sell it for $650, or I'm going to sell it for $600. I don't care. I just got to get rid of these monthly payments because I can't afford it, right? That's the scenario where I want no one to fall into, like ever. And so the objective is, how do you get a property that can be in the top 10 percentile? Or how do you make your property within the top 10 percentile? Because a recession does not hit the economy equally. It hits people who make less money a lot harder. But people who make money doesn't hit them as hard. And even if it does hit them as hard, they still have money. And those are the people that keep traveling. They keep moving. Even during COVID, when everything went to people are still traveling. You were told to stay inside. People traveled. And so the strategy is try to take your dollars and use them in a way that are going to allow you to be at least within the top 10 percentile of your market, so that when everything comes down and we go back to this same scenario of choosing one Airbnb over the other Airbnb, yours is so much better than all the other ones. And now you've brought your price down to theirs. You're still getting booked. You're still covering at least your bases. And that's when you're breaking even, right? That's when you're okay with breaking even.
This is all very insightful. I hope everybody out here is taking notes. They're going to re-listen to this again, because this is what you need to hear, right? It's not what you always maybe want to hear, but this is what you need to hear, okay? Airbnb is definitely a business. It's not just a tax strategy. It's not just another rental property. And this is all, kind of breaking it down.
Tom, before we move on, this is kind of crazy. This call's happening. I'm going to show you guys this. This is a client of mine that is in the top 10 percentile after only 2 months of being listed in the market of Miami.
Oh,
like exactly to a T we were talking about. I'm holding my phone because it's a story that I posted because it was just sent to me today. That's what wins.
Yeah, it's a small world. It's crazy that happened, because this is exactly what we're talking about right now.
To a T. It's fun when it's a lot of it has been theory in my head, and I've been fortunate enough to be able to take these theories and actually test them. You know what I mean? Like everything is saying that this will work, and then you do it and it's like, oh, it worked. Cool. Okay, let's do it again. So anyways, sorry if that wasn't what you wanted to hear, but I think we should have a call afterwards, and I'll give you a helping hand as best I possibly can on this property and see if it makes sense.
Yeah, no, absolutely. I'd appreciate that.
Cool. Can I give you one more thought to just you can, I'm going to plant a little seed and see where this grows. If you can deploy $700,000 into a property, right? Like what if hypothetically you bought a $400,000, $500,000 property, and what if that property made, let's say $30,000 to $50,000 in cash flow, right? Because it sounds like you have enough capital to be able to do that based off of what I know. And so the question then becomes, what could you use that cash flow for, right? So could you use that cash flow today to just move into the 700, save up a little more again, and then just move into the $700,000 condo today rather than down the road? So you use the capital now to create yourself some cash flow. You wait a little bit longer, use that cash flow to then go live in the condo that you want to live in. Because I'll tell you, that's my exact strategy. I want to get an Airbnb that's going to cover my mortgage because I feel like it'll just be a weight lifted off my shoulder to be able to do that. And I know where they exist. I have the capital to be able to do it. And so I'm going to go out and do that. And it's going to cover my mortgage. And I'm going to be like, cool, now my mortgage is covered, right?
That's even smarter. So basically what you're doing is you're just finding a property that cash flows enough to pay the mortgage instead of,
Exactly.
That makes a lot of sense. Yeah.
Different, you might have to wait a little longer to buy the property and that maybe it goes up to 800,000, but like at least you've got this to